Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be having a look at, as per the title of this video, the Bitcoin signal that's never been wrong, which is now flashing and why we need to pay attention. I'm also going to be having a look at one of the strongest indicators that we are still in the bull market. I'll also be looking at one or two of the Brexit indicators to show exactly where we are in this particular cycle. And as per usual, I'll have a look at the wider markets as well as the 60-day cycle. So if that sounds interesting, then without further ado, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. And I'm going to start off with this signal, which is giving us a sign to pay attention. What is this signal? It's called the hash ribbons. And the one that I'm using here, as you can see, is by Capriol Investment. So if you go to the indicators, type in hash ribbons, and it's this one here by Capriol, and the settings are all standard. So what is this telling us? That's the main thing we want to know. So if you look at the hash ribbons here, what you'll see is a series of blue dots, which are your buying dots. So this is giving you a signal that whenever there is a blue dot, we need to pay attention because the price is going to do something, and that is that the price is going to go upwards. So when you go back to the first cycle here, the red line is the halving and these yellow vertical lines are the tops of the previous cycles. So before the halving here, you can see quite clearly with this blue dot, as soon as we got this blue dot here, the price started to rise. Then we got the second dot, price started to rise, and the third dot, and this was the final part of the parabolic move. Then at the end of the bear market here, we got another blue dot, which is telling you to pay attention that the price is about to go up again. It doesn't do it immediately. When you look closely at this, as soon as you get a blue dot, it doesn't mean that the price can't go down. And on a few occasions, it has actually gone down first before it moved back up. But these are your larger picture signals. This is not trading on a daily or a weekly basis. These are your cycle signals. So once again, at the bottom of this bear market, you got this signal here to buy, and then once again we started to bottom out and went up, and then got a second signal here, which was again the sign to go up. Then after the halving, in this particular cycle, there was no other blue dots whatsoever, so we had to rely on this one as the last buy signal that we got here. And if you didn't get on here, then you would have missed all of this. So if we continue into this next cycle, once again at the bottom of the bear market in 2018-19, this buy signal was telling you to get on board here. Then the next signal here was after we topped out at 14,000 and went into this big rally here. And after the COVID situation in March 2020, we got another buy signal here, which was after the COVID situation, and that again was the trigger to go much higher. And then we got a series of two more dots, which took us up to this point here. And then when topping out in April 2021, in the mini bear market that we got there, we got another blue dot one more time, which again was another signal to go up one more time. And in this current cycle, at the end of the bear market, guess what we had again? And I showed you this at the bottom of this market at the end of 2022. And the last one that we got was this one here in August 2023. And once again, that was the catalyst for the price to go back up one more time. So this brings us to what's happened now. So if we look closely and move this chart to the left, you'll see that we've just got a new blue buy signal here. And if we look closely, this is where we are currently. So here we are with this current buy signal, and it's hit right at the top here at 70,000. And what we've got here, as per one or two of the other previous signals, that we've got a price decline before the inevitable price rise that we can expect as per the previous three cycles over the last 15 years. And as we can see from the historical perspective, you would be ignoring this at your peril, because at no point has any of these signals led to a new bear market. You either get them at the bottom of a bear market or just before the big rallies that are about to come. So in the absence of having a crystal ball that's telling you what's going to happen, nobody knows the future. Nobody can tell you what's going to happen tomorrow, never mind over the next few weeks and months. All we have is the charts and the signals, some of which are stronger than others. And this one is definitely one of the most strongest signals on the Bitcoin chart over the last 15 years. And so far, they've been worth their weight in gold. So according to this signal, we should be, in the matter of a few weeks, be expecting the price to have a big rally to the upside. And we'll have a look at some of the micro analysis as well later on in terms of the 60-day cycles to show us exactly where we are currently and where the probability is for the next move for Bitcoin. Okay, I'm going to move on to one of the most powerful signals which tells us whether we are still in a bull market or whether we've actually made a turn for the worse. And that is the 8 EMA on the monthly time frame. We've just closed the August candle, and I just want to bring everybody's attention to this so we can see from a factual point of view, not my opinion, not anybody else's opinion, just the facts in the charts which are telling us certain signals, because that's all we've got. And this is the 8 EMA, that's the blue line that's weaving its way through this price action here. So in the first cycle, as you can see, so this is the bear market. And once we get the price action going above the blue line here, as you can see, we don't ever really get below the blue line. We certainly don't have any closes there. We can see the odd wick along the way, but we don't have any closes below the blue line until we get to the top of the bull market. And then when it falls below it, like here, that's your signal that we're in a bear market. And if we move to the second cycle, same thing happens here. At the end of the bear market, once you recapture it, that is the signal that we're in a bull market, and it tends to always end at the top here. And then once we fall below it one more time, like with this candle here, that's your signal that we're in a bear market one more time. And if we move to the third cycle, very similar. Obviously, this was a double top. So we got a little bit of a variance here. And as we always say, Bitcoin doesn't repeat exactly, but it does rhyme. And these are the only signals we've got. And we've got to elicit as much information as possible to give us what's going to happen in the future. So once again, once we bottomed out with this bear market, so once we recaptured this blue line here, we had a mid-cycle top at 14,000 and a mini bear market where we fell below it here. And this was all before the halving, so we knew that there was going to be a big blow-off top coming after the halving. And this was the COVID situation where it fell below it. But once we recaptured that with this candle, that was our signal that we are now in the parabolic phase of the bull market. And this was our first top in April 2021. And this was the curveball that Bitcoin sent us here with this candle closing below the 8 EMA. And you can see that once we recaptured it, this was telling us that this was a fake out to the downside. And this was what led us to the top here. And once again, once we closed below it on this candle, this was our signal for the bear market one more time. So this is what's happening currently with the current cycle here. As per all of the previous cycles, we went into a bear market and we recaptured the 8 EMA back here in January 2023. And one more time, we got a fake out or a curveball with these two candles which closed below the 8 EMA. But since then, as you can see quite clearly, we have been above the 8 EMA. And with the last candle here in August, this is where we've ended up right on the blue line here, the 8 EMA. So you can see how relevant this blue line is, that we just managed to find support and close above it, and that is with a big long wick at the bottom. So what we've really got is a hammer candle at the bottom of a trend, which is a reversal bullish sign that this is on its way back up. So despite the doom and gloom on the shorter term time frame, with all this 6 months of sideways consolidation, when you zoom out and have a look at the bigger picture with the bigger signals, which are the most accurate signals, you're getting a completely different picture to the one in the short term. And if we have a look at the Brexit indicators, the main one being the pi cycle, the inputs for which are 350 simple moving average against the 111 simple moving average. So the green line here, the faster moving average, is the 111 simple moving average, and the red line is the 350 slower moving average. And it's a very simple visual, and that is that when you see the green line crossing the red line in each of these cycles here, the red line being the halving, so once you get after the halving, the crossing of this line, the green over the red, that is the signal of a peak. And in the first cycle here, before we topped out, we got two signals here for the two peaks. And in the second cycle, once again, they crossed over right at the peak here when the green crossed over the red line. And similarly, in April 2021, this was again a curveball when the green line crossed the red line here. But on the second top, as you can see, the red line is very far away from the green line, so it already topped out. And currently, as you can see, the red line is nowhere near the green line. So we would expect, as per the previous historical perspective, for the green line in the coming months to start moving up and cross over the red line. And that should, as per the previous cycles, give us the signal to the end of the bull market. So let's see where we get to, but certainly these are the bigger picture signals which we're looking at in order not to get sucked into the short-term emotions of the market, where quite a lot of people over the last 6 months have left this space, and they'll only come back when the price starts to move up. So one more time, we go through this same cycle time and time again, and that is that people get on with the Bitcoin price at a high price and then they get off at a low price. Okay, so we are now going to look at the short-term picture with Bitcoin, or what's happening. Now that we've seen the bigger picture, we can now put this into context and into a realistic perspective of where we are in the shorter term. So just to let you know what's in the news and what to expect in the coming days and weeks, is that what we've got here is that Mt. Gox and the US government could well be putting a pressure on the Bitcoin price, because there may well be around about a $15 billion Bitcoin selling pressure coming in. But on the right hand side, you can see quite clearly here that the whales are hoarding Bitcoin. So the long-term smart investors are actually, with the 100 plus Bitcoins, have a 17-month high. So these are the ones who are going to be the movers and the shakers of the Bitcoin price. And they're not selling. The number of wallets with 100 plus Bitcoins is now at a 17-month high. So when you scroll down here, you have a look at where the pressure may well be coming in the coming days and weeks. And that is what you have: the USA government with 203,000 Bitcoins. China has 190,000. But as far as I know, China has no indication whatsoever of selling their 190,000. And neither has the USA government. It hasn't given any concrete proposals to be offloading this amount of Bitcoins. The UK with 61,000, Ukraine with 46,000, that may well be in play because of the war going on in Ukraine. And Mt. Gox has already been distributing its Bitcoins here, and so far there have been no signs that there's been a big sell-off from the recipients of this compensation. And Tesla has 9.7 thousand Bitcoins. So you can see that there's quite a lot of holders of large amounts of Bitcoin. But that doesn't mean they're all going to be selling, but they certainly do present this potential pressure for the Bitcoin price. And if we move down here a little bit, you get a more of an accurate picture with what's happened with the Mt. Gox creditors. And that is that so far, those creditors have not sold during the last major 4 billion distribution, as reported by Glassnode on July the 29th. So let's see how that pans out, but it's always very important to be aware of what's going on in the background, because it's the fear of the unknown that makes people make the bad decisions. So when you know what's going on in the background, it puts everything into context and perspective. So what can we expect in terms of the range of the Bitcoin price in the coming days? And this particular chart, the liquidation heat map, has been incredibly accurate in giving us a very good picture of the range for Bitcoin in the short term. And as you can see, the yellow zones are the ones where most of the stops are for the leverage players. And on the downside here, we've got a zone at 56,700. But there's another minor zone here at around about 56.1. So there's no need to panic if the price does go down to 56,000, because the price is just trying to take out those stops. And to the higher side, we've got a zone here at 58 and another zone just above it at just under the 59,000. So this is where the range really is over the coming days, which is between 58,800 and 56,100. And if you're wondering why the price of Bitcoin has been a bit subdued since the last time I did this video last Tuesday, we can see quite clearly here with the ETF overview of the asset inflows and outflows. Despite BlackRock buying up 3,300 over the last 7 days, we can see that Grayscale has been bleeding about 1,500, and there's the other ones like ARK bleeding another 2,000. And if you go down this list here, you can see there's a lot of red here, whereas last week there was a lot of green here. So we can see that the picture has now changed to more red all the way down here. There's been a lot more sold off than coming into the ETFs. But as you can see quite clearly, it's a dynamic picture. It's changing all the time, but it's something we need to keep our eye on. And if we move on to the dollar, we can see quite clearly the symmetrical triangle we've been actually looking at over the last many months broke out as expected here and came and found support at this point. But now we've broken down below that to the point that we were expecting around here to retest this level at 100, and we've now got a bounce last week to retest that support as resistance. So I would expect with a higher probability for the dollar to get rejected here on its way down further to these levels down here at around about 97 all the way down to 95. So this is the next range I would expect dollar. Of course, there's this level here where you might find some support at around about 99. As it's been coming down, it's allowing the wider markets to have the breathing space to move much higher. But with Bitcoin, this has not materialized yet because we've got the other factors, as I've just shown you, which are bearing down on the Bitcoin price. And if we have a look at the SPX on the 60-day cycle time frame, we started this new cycle on the day 73 on the 5th of August, and we're moving into the midpoint here. Now, what we've really got at this moment is a possibility or potential of a double top. So this is what we've got to really be looking out for here. If we get rejected at this point, then this will have been a double top and we would have a period of time of going into this mid cycle here. And it's when it comes back down to these support levels, maybe down here, where it's found support in the past and resistance here. This would be a natural place in the mid-cycle for the SPX to come back down into. And it's what it does over here that's going to really determine what's going to happen going forward. If we fall through this here, then that would be a danger sign that we've double topped on the SPX. But if we have a bounce at this point in the mid-cycle, we need to really break this point here to know that we are still continuing on the bull market with the S&P. So let's see what happens here. So there are critical factors now playing on the S&P here where I can see. So we're coming into the mid-cycle at a resistant point. So you would expect on balance for a mid-cycle pullback here. And if we're going to have a shallow pullback at this point, it'll probably be either at this point here at around about 54.50 like this, and then have a bounce back up again and create a right translated cycle. Or if we have a deeper correction, it'll probably be down to these support levels down here at around about 5,200. And if we move on to gold, we can see quite clearly that the August monthly candle, this one here, has clearly broken out from this range that we had at this point. So we've had a rally up here, consolidation, and now we've broken out. What we really need now for gold is a follow through to the upside. So this candle for the current month, September, is very critical. If we can close above this close of the August candle, we could expect quite a large explosive move to the upside following on from there. So just something to keep an eye on. But certainly, as we can see quite clearly, having broken out of this neckline, we're really in this bullish mood at the moment. Silver doesn't seem to be in the same mood currently. What we've really got is that we've got some sort of a stalling going on at this neckline. But as you can see from the long wicks at the bottom, there is a rejection of the lower prices, but also there are wicks at the top, so there's a lot of indecision. It has to make some sort of a decision sooner or later to break out of here or to come to the lower side. And with the dollar having a lot of pressure to the downside, you would expect with a higher probability for this to be a breakup to the upside. So only time will tell, but certainly silver not following gold in terms of its bullish nature at the moment. Okay, if we move on to the 60-day cycle, we're now coming to the end of this current cycle here. And currently from this bottom here, today we are on day 59. So we are about to have the end of the cycle anytime in this region, any point in this region here. And as per usual, as we would expect, we normally have into the cycle bottom, we usually have a pullback before we have the start of a new cycle and the end of the previous one. So we're now getting the signs that we are about to bottom out for the end of this cycle. And as you can see quite clearly, we have a support line here between 50,000 and 53,000, and there is still the possibility that this could quite easily run down here, create a wick at the bottom, and that would be putting the bottom in for the end of this current cycle and the beginning of the new one. But if you look left here, this is a candle that you would think with a higher probability is going to come back and retest, and this candle at the low is at 56,100, and as we saw with the liquidation heat map, a lot of stops are at this 56 level, so this would look like a high probability play at the moment to end this particular cycle here. And should it break down below that level, then just like we got a long wick at the bottom here and a long wick at the bottom here, if the price does come back down, you would expect a very strong buy up of those lower prices to create that long wick to signal the end of the cycle. So let's see where we get to, but looking quite interesting. We aren't far off from the end of the cycle, and we can see with the stochastic RSI, we are just below the 20 here. We're just crossing over. It's just a matter of time before we start moving above the blue line here at 20. But the RSI, as we can see quite clearly, has still some room to go to the downside if it indeed does want to go below the 30 level. And finally, I'm going to have a look at some candlestick pattern developments which are giving us some sort of information and be aware of. And that is, if you go to the daily time frame and we go to this shooting star candle here on the 20th of August, and I put these dotted lines at the top of this at 61,400 and at the bottom of that is at 58,500, and these are always very fascinating because what it's really doing is whenever you see this type of candle on the daily or the weekly or whatever the higher time frame is, the one thing you can be sure of is that they start to play a tune which the other candles after it follow. So what this candle did after it printed was that it set the tone of the range of the top and the bottom for the following candles here. So we got these two candles which remained within the range there, and as often happens with this particular candle is that you get a breakout or a fake out either to the upside, which is what happened in this case, or to the downside, which is exactly what's happened now down here. This was the Sunday's candle, but what it really does is it still remains within this range here. So despite the fake outs, unless you get a follow-up over here, which we didn't do, you can see that the next two candles here were indecision candles, and very quickly they were followed by a strong red candle, which then created this evening star pattern, which is a very strong signal that the price is going to come back down. And again, one more time, it came back into this range. And then the following candles all remain, despite these long wicks at the bottom here, they're still closed within the range of this first shooting star candle. But not only that, within this range, we got another shooting star one more time. So you can see how powerful this candle was in determining the price action of Bitcoin. So what this candle has done is to actually reconfirm this particular range one more time. So after this shooting star, we got this hammer candle to the upside. So this is a bullish candle with a long wick at the bottom. Then you've got another indecision candle one more time as there is no follow through to the upside. And that was a signal that there isn't enough demand to carry it up there. So now what we got on Sunday was a breakout or a fake out to the downside. And what we really need in order to actually make our way back to the higher side is for this current candle, which is today, Monday, to come back into this range one more time from 58.7 and 61.4 here. So keep an eye on this candle today. Usually with a fake breakout, you don't normally get a follow through like in this case here. So if this is a fake out here, then we shouldn't get a breakdown to further lower levels. We should be able to recapture this in the next few days anyway, just like we did over here. We came back into this range within 4 days. So interesting developments regarding candlestick patterns and how they're playing out within a certain range as we've seen here. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.